So today we're going to be looking at MassRoots. It's another marijuana company. This company isn't focused on growing or selling or anything. It's focused on the social media aspect of it. And currently they have a market cap of 68 million, which is, compared to what the company is, that is actually somewhat high in my opinion. But you know, everything is high that's related to marijuana right now. I didn't mean to do the pun, but yeah, I got it. Anyway, so this is their website. It actually looks pretty nice, which is good. They they're trying to be a social media network, so their website better look good, unlike some of the other marijuana websites which look terrible. So the website looks pretty good. One thing that annoys me right out of bat is that right now it's February 2nd, February 19th, 2017, and you look at this graph that shows their user base, and they only have it up to May 2016. So why is this not updated a lot more? There's two reasons. Either they're lazy and they don't want to do it, or they're not getting enough users to actually update this and make it look attractive to people, so they're not releasing the information. Because updating your user base is really not that difficult. Doing the stats on that is really easy. And they're not updating for like a huge chunk of this. And I want to see what's been happening more recently. Because if they keep on getting exponential growth, then they're going to, that's very good. But if it's starting to stall over here somewhere, like near 2017, then that's bad. So this is kind of annoying, the fact that they're not releasing some data. But other than that, they kind of have their little pitch over here. And yeah, so let's take a look at their financials. You can find their financials over here. Just click that, and they have a bunch of documents. So we're going to go to their financials. I did look through this. They currently have $500,000 in assets, which is not a lot, to say the least, but okay, $500,000 in assets. And moving on. So in terms of revenues, they got, for the 3 months ending in September 19, they got 200. For the 9 months, they got 800,000 almost. So it's about $1 million a year at this current pace, or at least it should be. Assuming that they can keep up what they've been doing in 2016, they should be making about $1 million a year in revenues. However, their operating costs are very expensive, so they're losing a lot. Their net loss for the 3 months ended in September 30 is $3.5 million on a website. This is ridiculous. That's a lot of losses. There's companies that are doing less than this company. I mean, more than this company, and they're losing less. So yeah, these types of losses, they're not very good. You don't want to see these huge types of losses with a company like this, because getting funding for this is going to be difficult on its own. But already having huge losses like this and having a bunch of debt, that's even worse. Now, if they can grow fast enough, obviously that's going to be worth it, having that debt, but they're not releasing that growth, which is kind of annoying. Because I want to see what this graph looks like now, but they're not. I don't know where to find it. I don't think they have it. Maybe they do somewhere, but I couldn't find it. Sorry. So we have all their numbers. I'm not going to go through their payroll and all of that stuff. I'm just going to go all the way down. You can probably read through this. I skimmed through this. I'm not going to read all of this. It's too much writing. I'm not going to read pages of stuff. We're going to go down to their losses and kind of look at that, because that is a little bit more interesting. That gives you more insight on the company. Alright, so for the 3 months ended September 30, they lost 3 million. For the 6 months, they lost 8 million. Now, if we look at how they lost this, it is actually a little bit annoying. Well, it's not annoying. It's a little bit worrisome, but so they had 800,000 in payroll expenses. Advertising was 250. $1 million in option issuance for employees. Okay. General, like 900,000 increase in other general and administrative expenses. That's a lot. And also, wait, I'm looking at the wrong part. This is where I'm meant to be looking at. So they incurred a non-cash interest and penalties relating to their convertible debt of 1.2 million and 500,000 respectively. So this is a lot. I don't know why they're. This is kind of worrisome in my opinion, because I don't know if this is fine for this type of company. It might be fine, but it seems like a lot. This type of debt is not very healthy. they're eventually going to have to pay it back, and their only reliance on that is their website, which they're not displaying the data for. So it might seem a little bit shady. It seems a little bit shady to me, in my opinion. So I wouldn't throw my money into this because I'm not sure what the future looks like for this company. If they release this data and it looked good, then I might consider it. But I don't know where to find this missing little data piece, because the user growth is the most important thing in a website like this. The way that they make money is by advertisements. So I need to know what this looks like. I need to know what May through February looks like. May through February of 2017. So, if they're not willing to show this, then I don't know. You might be able to find it. Once again, I'm not sure if they don't show it, but if you're going to have this graph up, why not just make it all the way to 2017? Once again, I'm harping on that because that's their main source of revenue, and they're not showing it. So it's shady. It's really, really shady. So personally, I wouldn't invest into this. You can make your own. You can have your own opinion, but those are my 2 words on this company. Hope that helped.